Hey guys, Muka here from StockAviator.com. We're going to take a look at WPCS from Friday. Alright guys, so what were we looking at when we alerted WPCS? First off, it came out of this channel, broke out, came back down, tested the breakout level, bounced off of it, and then continued upward. If we use this line right here as resistance, maybe somewhere in here, then you can see as soon as it breaks out of this level, it has the possibility of continuing upward. So on Friday, as soon as it gapped up, I started watching this one to see if it was either going to have people come in for profits and sell off, or if we were going to see a potential breakout. So looking at the 1 minute chart, you can see my resistance line transferred right over. The stock gapped up. It has like a little triple top here. And as soon as it broke out of this level, I alerted the chat room at about 78 cents and said, watch out, WPCS is starting to pop. A few members got in a little bit late up here in this area, but I told them to keep holding on. I wanted to see if this stock would create what we call a dollar roll. So what happens when we see a dollar roll? The stock comes up, it tests some levels, and then as soon as it breaks this $1 mark right here, we'll see that momentum is just built up. It continues up. This one actually goes up 20% after it hits the dollar mark. So now in the future you can tell when we're saying that a chart is breaking high of day, this would have been the high of day at the point, and it started to break out. You can buy these high of day breakouts, and then again, this would have been the high of day here at $1, and as soon as it broke out it went higher, and then it made a new high of day up here. So you can use the high of day breakouts as a gauge for intraday scalps, as well as levels like this when they create a nice top and then they start to move out higher from those. When I take these trades, I like to use my stop level just below my buy signal. So if I wanted to take this trade first thing in the morning at 77 cents, my stop out level would have probably been right here, 75, 76 cents, depending on my position size. You should size accordingly so that way you're not taking too big of a loss for your account. Everybody has a different risk tolerance. Some people say you shouldn't lose more than 1%. Some people say you shouldn't lose more than 3% or 5% of your total account in a single trade. Everybody's different. All those levels are acceptable. Just be aware that if you're losing 5%, that now you have to expect your trade to make at least 10% to become profitable on half of your trades. So keep that in mind, size accordingly, and watch out for these plays. So people ask me, when do you exit WPCS? How do you know when the top is in? Well, this isn't an exact tool. As you know, any indicator that you use is not accurate to 100%, but this is just a guideline I use, as well as level 2s, and just looking at engaging at the overall market momentum. So 13 EMA line, we'll get rid of this 20. The 13 EMA line trends just below the stock, and it tends to be a little bit slower, so you kind of have to predict where it's going to go. But as you can see, 13 EMA caught up here and it bounced up higher. The stock pulled back, tested the 13 EMA, bounced again, and as soon as it came back and crossed below it, the stock began to trend down. So what do I use? I use the 13 EMA as a potential pullback signal to buy more, and if it crosses below it, that is my profit target. So I would have sold right here at $1.12. Now another thing I use is scaling in and out of trades. So I may have bought some here to start my position off right when it broke out, and then I would have used my 13 EMA to buy my second position into the dollar roll. And your first profit target could have been right here off of your first trade, and your second one could have been up here, and you could even do a third scale out and wait until it crosses below the 13 EMA, and all these profit targets are profitable by a large percentage, so you're not really losing anything by scaling out of a trade other than having extra commissions. If your commissions are high, this might not work out well for you, but this is a safe way to make sure that you're not getting trapped, you're taking profits, and if the stock does crash, you've already took some profits. You have until 77 cents to break even, or if on this trade, until 95 cents or so. So it's fairly safe to use strategies like this, and this is why I trade like this. I don't take big losses. A lot of people see me and I get out of trades with a 20, 30, 50, maybe $100 loss here and there, but nothing large, nothing that's going to damage my account permanently. Another tool I like to use to gauge tops, bounce levels, pullbacks, etc. Fibonacci extensions. Basically, you start at the bottom and you go to the top of your pivot and back down to the bottom. And as you can see, the 100% level is right here at the top. I also like to use the 61% level, and you can see that's pretty much right at the top of this one. And you can just use this to gauge where the top of your trend will be. It's fairly accurate. It works on a lot of stocks, and basically what it does is it takes this run and it adds this little retracement and it extends it to the same level. So basically it just takes this and says, oh, that's going to be 61% and this one will be your 100%. So it's a fairly easy tool. If you get good at it, you don't even need to use the tool. You'll just know that, this length of this pullback and this length of this retracement comes out to about here. You could take profits there. And, if you double that, it comes up to here. So as you get more comfortable using that tool, you'll just be able to gauge it without even drawing it. You'll just see it as it happens. If you want to receive nightly watch list, premium stock picks, stock alerts, and exchange trade ideas in our live chat room, sign up at the link below and receive a 2-week trial and a discounted rate on your first month.